Hello, hello, hello. Welcome to Al Stock Trades. In this video, we're going to go ahead and talk about Nvidia. This is going to be the first of many videos to discuss Nvidia. What I wanted to go ahead and say first is if you go ahead and look at Nvidia's price, you can see that it is up 87% on the year. And what a fabulous year for Nvidia. In fact, if you go a year ago, you could see near October when we had those lows, if you go all the way down to this low point, you could see it has gone up about 123%. Now, why am I making this video? So, unfortunately, some of you guys don't have access to our Mastering Stock Market course. This is one of the lectures that we have, and many lectures are essentially going to be coming into our course as we go ahead and develop the brain machine, which is pretty much almost fully operational, right? So, this lecture, it's titled Mastering the Stock Market Course, Positive Free Cash Flow and Positive Net Income Calculation. Now here, just as a disclaimer, this was made about 8, and I want to say 8, 9, 10, 11 months ago. This was made. It was made when the stock price was actually falling down from I think it was at $177. It was made around right here. And we did the price target analysis on it. So the reason why I give the disclaimer is that it doesn't use the most current up-to-date information regarding NVIDIA. And it's important to know that the gross margins for NVIDIA has started to come down, and the net income obviously has started to go down, and as well as the free cash flow and the working capital. So what price targets that you see here obviously need to be altered in conjunction with the earnings report, but the overall message is the same. So let's go ahead and start it, and I'm going to show you bits and parts of it. Okay. So let me go ahead and remove this. Okay, so now we're going to have the audio. So we're going to go ahead. I'm going to put it at 1.5 the speed so you can hear it fast.
Welcome to your Mastering Stock Market course. In this video, we're going to be giving you an example on how to approach companies with positive free cash flow and positive net income calculations. But first, we have to preface the story. Imagine you're sitting here in this chair. It's January 4th, 2019. We've traveled back in time. We don't know what happens in 2019, 2020, and the rest of 2021 and 2022. We don't know anything. All we have are the numbers that the company gave us in the fiscal year of 2018. You check the stock price, and you see that it's trading at $34.05, losing half of its value.
So as you can see here, the stock was back in the day was trading at $34. And in this course, we walk you through how to find these companies that basically go from negative to positive free cash flow, or even accelerate, even if they're already positive free cash flow or positive net income. How could they accelerate their growth and the slope of their growth so you can capitalize on it and come in it, go inside before retail investors ultimately buy? But what I wanted to do is I'm going to fast forward through all this and go to the 6-minute and 30 cents mark here. Now, again, you may see the price targets a little higher. My recommendation, as I told you in the beginning, if you just came online right now, I recommend rewinding the video when I showed you the overall downtrend in comparison from 2021 to 2022 to then now 2023. But again, the message is the same.
69%. And the stock price now is hovering anywhere between 253 to 564. Now, mind you, I kept the free cash flows from those years to just be a little bit more conservative to compress the stock price. Okay. So we're looking at a bear of 253, a base of 366, and a bull of $564. So let's say you went in, you're like, you know what? I like these numbers. I'm going to go in and buy. And would you look at that? You bought right here. And you waited many years. And you finally shot back up here before the pandemic even happened, and you made your money. You essentially got to a point where you've hit your intrinsic value calculation here. You doubled your money, but then you realize the company has gotten stronger. The financials of the company have gotten way stronger. The net incomes have been increasing, and 2020 was a flop, but then 2021 they became stronger, and your calculation became true. Our base case was $366.
So overall, let's go ahead and share the screen here, and let's go back to this location here. So what ended up happening, ladies and gentlemen? Well, first off, we have a intrinsic value bear case, at least from this particular timestamp when Nvidia had its fundamentals in line going parabolic. Now they're essentially being depreciated based off of the economic conditions. But I'm sure if you were to redo an intrinsic value calculation, you would most likely find another stock price could be hovering at this value, or maybe this may be still undervalued. Which I haven't done the calculations yet. This is just kind of an introductory to show you if you do these calculations, and let's say, for example, the calculations do state that this company has value, then for the people that sold here, giving you an amazing stock price, they are regretting this because they just lost on 138% gain. So for the people that got involved in this particular downside and said, you know what, I do see value in this company. This is, I haven't seen prices like this since what was it, 112. I haven't seen prices like this since literally near 2020. I'm going to go ahead and get involved, and these are the people that get rewarded. And as you can see, if you have this intrinsic value calculation, it'll help you. Now, very quickly, for folks that are involved within our terminal, we could easily go in and do just open up one of our terminals. We could open up really quickly just a quick DCF here, and then type in Nvidia to see kind of a quick drawdown. So we got, it's right around that price. And this is more of a short-term DCF. We can do a long-term DCF, which is NVDA, and this is part of our stock terminal. So we can go ahead and see that. And it's showing lower end. And again, this is multiple ways to skin a cat. So I'll explain what is my favorite intrinsic value calculation. We can go ahead and do this, and then we're getting around 79, right? So obviously, sometimes these are a little bit more conservative, but overall, the best calculation that you can essentially curtail the mastering stock market terminal is essentially utilizing the financial data and going to the intrinsic value software here and utilizing your own intrinsic value and calculating it yourself based off of the numbers here. And as you can see, if you do it correctly, you can certainly get rewarded. Now, am I saying, should we go in, or at least am I going in? Well, personally, when a stock goes up this high, I tend to be a little bit worried. Again, I'm sure others are getting greedy on this, and I'm sure a lot of analysts, if you go ahead and look at them, because this is just what they do. It's just in their nature, and I've been in this game long enough to see and predict that most likely analysts have started raising up the stock prices. There it is. So as the stock prices go down, analysts lower their price targets, and then now, since the stock price is rising, analysts are increasing their price targets. Which obviously for me, I tend to not like analysts that do that, because then they just start increasing it to where it's going to go down. But it's okay, because if you know the value, which we haven't calculated yet, follow us on the next video. If you haven't done so, please like, subscribe, and hit the notification bell, and we'll go ahead and come back to you, Ricky Seed. Yeah, wonderful. I'm very happy that you like the company. It's definitely really a fabulous one. And we made other semiconductor videos regarding other companies that I do believe are a little bit more undervalued than this one. I have not done the intrinsic value yet on this, the updated intrinsic value, but the goal here was to share with the folks out there what the Mastering Stock Market course is capable of, and how you can essentially utilize it to find companies that are positive free cash flow and positive net income. And the way we split these up, and the way our intentions of splitting them up, if we can just go here and go to home really quickly, is that how to use Al's intrinsic value calculator. What you want to do is you want to find companies that are positive free cash flow and positive net income. And the goal is, those are your creme de la cremes. Those are the companies that you essentially want to, have a lot. They're a little less risky, like Apple, Microsoft, Nvidia, and other companies. But for those companies that give you those crazy returns, they're usually going to be negative free cash flow and negative net income. But the hard part is finding companies that are negative free cash flow and negative net income that have a high probability of transitioning to positive free cash flow and positive net income. And that's where you can do the intrinsic value calculation of 5% of the revenue and then gear it up to their essentially domain industry to look at other companies that have that particular revenue to estimate a free cash flow. And you could take an opportunity and advantage and snipe up those shares before retail, before even Wall Street steps in. So I hope this video shows you the power of these intrinsic values. I haven't really done a video regarding other positive companies that are doing quite well because I'm just doing 1,000 other things. But I think this is a great example to show you that, oh, okay, every stock right now, its technology is trash. No, that's not true. And for the folks that have those laser eyes that don't carry emotion in their investments, well, congratulations, you're up 87%. Okay. All right, ladies and gentlemen, have a wonderful day. And don't forget to like, subscribe. And if you want to know more about our Mastering Stock Market course, there's a link down below. Follow us on alstocktrades.com. I'll see you on the next one. Bye-bye.